Good afternoon, everyone, and thank you so much for joining our webinar today, Medicaring about Delayed Retirement. My name is Amanda, and I'll be your moderator. ERISA attorney Larry Grigine is our presenter. There is a lot of information in these slides. Larry's really kind of packed it full. So if you missed something, don't worry. We'll be emailing you a recording and the slides after the webinar concludes today. I'll be keeping the webinar muted so that we avoid any background noise on your lines, but Larry will pause periodically for questions. There's a question box below, so just type in there and I will read your questions out loud for you. Our next webinar will be on June 6th at 1 p.m. Central, and we'll be covering DOL audits. But for now, I'm going to turn the presentation over to Larry.
Thank you, Amanda. I appreciate it. The reason why this seminar is extremely important because many employers now have employees that are eligible for Medicare. And once that happens, either the employee or the dependents are eligible for Medicare. There's some special rules that the employer have to be aware of. And what I'm going to try to do today is cover those areas that are important because if an employer doesn't get this right, there's all kinds of penalties. Now, it affects basically health coverage, it affects COBRA, it affects various other areas. And another area that's becoming real important is many employers over the last 4 or 5 years are now offering employees opt-outs, where they say if you opt out of our coverage, if you take your spouse's coverage, we're going to give you $100 to $200 a month. If the employer is subject to the Medicare secondary payer rules, that opt-out option cannot be provided to those employees who would be otherwise eligible for Medicare. That would be a violation, and you're going to see that in the next few minutes. Now, I'm going to be stopping periodically for questions, so if you have any questions, please, as Amanda indicated, please type your questions in the tab there, and we're more than glad to address any questions. So I'll stop periodically. So what I'm going to be covering, first of all, is the Medicare secondary payer rules. I'll be going over how that affects an employer, how that affects providing coverage, and what you can and cannot do in regard to those employers who would be otherwise eligible for Medicare. Then I'll be talking about Medicare Part D, what the employer's responsibility in regard to that, especially notices, coordination of benefits. Now I'll be talking about COBRA, and this is where it gets rather complicated because in certain situations, Medicare will shut off COBRA and other times it won't. And one thing that's very important under the Medicare rules, COBRA coverage is not considered to be employer coverage. And what many people don't understand is that if you decide not to take Medicare and then you're not enrolled in Medicare and you take COBRA, there could be a shock when you eventually take Medicare because then you could be penalized. So I'll be talking about that, and extremely important for employers to know this, to advise employees exactly what to do. All right? So let's look at the Medicare secondary payer rules. And what these rules do, if you have so many employees, then basically employer coverage is primary and Medicare is secondary for any individual who is entitled, who enrolled in Medicare. So, or eligible for Medicare. And what an employer cannot do is they cannot give any incentives to the employees not to enroll in employer coverage and to enroll in Medicare. So the employer has to be very careful in this regard what they can and cannot do in offering incentives. So the first question is, can an employer in any way encourage active employees to elect out of employer-sponsored health coverage when they are eligible for Medicare? And the answer is no. So again, any opt-out or cash payments an employer gives for anyone who's otherwise eligible for Medicare, they cannot do that. So the employer is, as this slide indicates, is prohibited from discouraging employees from enrolling in their group health plans or offering financial or other incentives for an employee eligible for Medicare or entitled to Medicare and not enrolled or terminate enrollment under a group health plan. So again, the employer has to be very careful in this situation and who they offer incentives to. And the answer I get from many employers, well, I offer it to everyone, what's the big deal? Well, again, this prohibition applies to most employers. It doesn't apply to any employer that has less than 20 employees for each working day in at least 20 weeks in either the current or the preceding year. So again, you cannot pay for Medicare, you cannot pay Medicare premiums, you can't give out cash payments to those employees otherwise eligible for Medicare. So again, it's extremely, and what this applies to, what this rule applies to is anyone who is in active employment. And as this slide indicates, this applies to any employee in what's called current employment status. So it doesn't apply to retirees, it applies to those employees who are still in. What does active employment status mean? A person who is in current employment status, if he or she is actively working as an employee, is the employer, in other words, self-employed individual, or is associated with the employer in a business relationship. What does that mean? It could mean someone who is an independent contractor who comes back and works for the employer. So again, it's a pretty far-reaching definition of what in current employment status. So what that means is if anybody has a working relationship with that employer, either as an employer, as an employee, an owner, or as an independent contractor, is deemed to be in current employment status. Now what that means is these Medicare secondary payer rules do not apply to anyone who is technically a retiree and is treated as a retiree and is not working for the employer. Extremely important to understand. Another question is, can an employer drop employees or dependents who become disabled from the employer-sponsored health coverage when they become eligible for Medicare if such employees are considered in current employment status? Again, the answer is no. So Medicare secondary payer rules prohibits a group health plan from taking into account the Medicare entitlement of disabled employees or a current family member. And again, this applies to both. So again, if you're, and this is tricky, an otherwise covered employee who is not actively working is nevertheless considered to be in current employment status if he or she is receiving disability benefits from the employer for up to 6 months or retains employment rights in the industry and hasn't had his or her employment terminated by an employer, isn't receiving disability benefits from the employer for more than 6 months, or Social Security, and has group health coverage other than COBRA coverage. Now, what happens in that situation many times when somebody becomes no longer active and has a reduction of hours, many employers will put them on COBRA. So many situations, this won't apply to most employers. Now, the rule is different in this situation than it is previously for age 65. In this situation, the prohibition does not apply to employers with less than 100 employees on a typical business day during the previous year. That means that the employer must have 100 or more employees, whether full-time or part-time, on at least 50% of the regular business days in the during the previous calendar year. So again, this rule is slightly different than the first rule when we talked about age 65. So who is considered to be a disabled individual under these rules? A disabled individual generally is those individuals who are under age 65 and who have been entitled to Social Security disability benefits for 24 months. And again, in most situations, the employer will offer them COBRA way before then. Now, in determining whether you're subject to these rules, and counting the employees and determining whether any of the exceptions apply to you, whether under 20 or under 100, what this slide indicates the fact we look at a control group basis. So it's the control group rules under 414, in the code. Also, if you look at the final bullet on slide 10, it indicates all employees that are considered to be a single employer in that situation under Code Section 52, and that percentage is only 50%. So if your employer owns other businesses and you have 10, but the other businesses have 15, 20, 25, 30, all that is grouped together to see if the small employer exception applies both to the age 65 rules and the disability rules. So you got to be real careful and understand who is a member of a control group in this situation. Now, what does it mean to take into account Medicare entitlement? Basically, what that means is you really, under this rule, you can't, a group health plan may not take into account the age-based Medicare entitlement of an individual who's covered under the plan, or the disability-based Medicare entitlement, so they can't treat these individuals any differently. A plan must provide a current employer's spouse who is 65 or older the same benefits. They're on the same conditions, so you cannot segregate those employees in one plan versus another. You have to treat them just like any other employee if they're active. Please remember this only applies to active if you're in current employment status. That's what we're talking about here. So we're not talking about retirees. So just because somebody becomes entitled to Medicare, it doesn't mean that they can be treated any way separately. So here's some examples in this slide, slide 12. So examples of employer or insurer actions that constitute an impermissible taking into account are provided in the regulations and include the following: failure to pay primary benefits, offering coverage that is secondary to Medicare, terminating coverage because the individual has become entitled to Medicare except as permitted under COBRA, denying or terminating coverage because the individual is entitled to Medicare on the basis of disability without denying or terminating coverage for similarly situated individuals, and then imposing limitations on benefits for Medicare entitled individual that don't apply to all others. So again, the crux of this is the fact that just because somebody becomes entitled to Medicare because of disability or age doesn't mean you can treat them any differently. Other situations are charging Medicare entitled individuals higher premiums, requiring Medicare entitled individuals to wait longer for coverage, paying providers, suppliers less for services furnished to a COBRA beneficiary than same services to others, providing misleading or incomplete information that would have the effect of inducing a Medicare entitled individual to reject the employer plan, including in its insurance cards, claim forms, or brochures distributed to beneficiaries or providers and suppliers instructions to bill Medicare first, and refusing to enroll an individual for whom Medicare would be secondary payer when enrollment is available to similarly situated individuals to whom Medicare would be a secondary payer. Now, what it comes down to, and what's interesting, you cannot give incentives to any individuals, and this is important because you cannot, for example, allow individuals to pay for Medicare premiums on a COBRA, on a cafeteria plan. You cannot give payments to someone who is entitled to Medicare so they will take Medicare. So again, as an employer, you're prohibited from offering any incentives. Now, what are considered incentives? Employers are prohibited from discouraging employees from enrolling in their group health plans or from offering financial or other incentives for an individual entitled to Medicare, not to enroll or to terminate enrollment under a group health plan. And this prohibition applies even if payments or benefits are offered to all other individuals. And as I indicated in the beginning, what's become very popular is that employers offer a cash out to employees. I'll give you $200 a month if you waive out of the group health plan. I will give you as a cash payment. And I advise employers that are subject to the Medicare secondary payer rules that you can offer to all employees other than those employees that are eligible for Medicare, because that will be seen as an incentive. Even though you offer it to everyone else, it cannot be offered for those that are basically either enrolled or eligible to enrollment in Medicare, because that would be seen as an inducement, an incentive which would be prohibited under the Medicare secondary payer rules. The next question is, can Medicare or Medigap premiums be reimbursed by an employer for active employees? And the IRS said generally no, but they created an exception in Notice 2015-17, and they created certain exceptions. Now, what they indicated was, if an employer offers to reimburse Medicare premiums for its active employees, it creates what's called an employer payment plan, because Medicare is not considered to be a group employer-sponsored coverage. And what you have to do is these are conditions that are in Notice 2015-17. Employer payment plan that pays for reimbursing Medicare Part B or Medicare Part D premiums is integrated with another plan offered by the employer for purposes of annual dollar limit prohibition and preventive care services if the employer offers a group health plan to the employee that does not consist solely of exempted benefits and offers coverage providing minimum value. So you offer a group health plan. The employer participating in the employer plan actually enrolled in Medicare's Part A and B. The employer payment plan is available only to those individuals who are enrolled in Parts A, B, or D, and the employer payment plan is limited to reimbursement of Medicare Part D or B or D premiums and exempted benefits, including Medigap policy. So again, there has to be some coordination between the group health plan, but again, the limitation is this can only be offered by those employees that are, again, not subject to the Medicare secondary payer rules. So it would be for age 65, any employer less than 20, and for disability less than 100. And that is shown in this slide right here. Now, suppose you participate in a what's called a multi-employer plan, which is union plan or multi-employer plan. And what this slide indicates that if any other employer in the group has 20 or more employees, then basically all the other employees in the group are considered to be large. That's what that slide is trying to say. So if you have a union plan and if you have one employer that's over 20 or over 100, and that situation, then it basically all the other employers, even if they're smaller, are then subject to the rules under the Medicare secondary payer rules. That's what that slide indicates. Now also too, are there any special rules for end-stage renal disease? And there are, and a group health plan, including a retiree group health plan, cannot take into account individuals' end-stage renal-based Medicare eligibility or entitlement for the first 30 months. So in this situation, the employer plan for the first 30 months is primary and Medicare is secondary. So Medicare generally must be secondary for the first 30 months, and then after that they become primary. So a plan may not otherwise differentiate in benefits provided under the plan and end-stage renal patients and other individuals covered under the plan. So for the first 30 months, the employer plan has to cover them as primary. After that, the employer plan would be secondary. So these prohibitions apply regardless of whether the individual has coverage by virtue of current employment status. There's no small employer exception that this applies to all employers. Medicare will remain primary for an individual who is entitled to Medicare due to age or disability on a primary basis. And every once in a while you may run into this, and it's important to understand. So there's no small employer. All employers are subject to this. Next, does an employer prescription drug program have to be coordinated with the Medicare Part D? And the answer is yes. The Medicare secondary payer rules are triggered when an individual who are enrolled in group health plans offers prescription drug policy, and in that situation, depending on the size you are and whether it's somebody is an active employment status, the employer plan would be primary and the Medicare Part D would be secondary. So again, Medicare Part D and group health plans are generally required to comply with Medicare secondary payer rules and other federal and state laws establishing payers of last resort. So even with Medicare Part D, this situation, again, Medicare secondary payer rules apply. Now, what gets lost out of this, and this is a very common question I get from employers. Well, okay, I can't give my current employees incentives, but can I sit down and talk to them and look at the cost of our plan versus taking Medicare and a supplement and show them the cost differential? Can I do that? You know, we're not telling that individual they can't enroll, but if we show them what the costs are, and if they make their own decision to opt out of our plan, is that fine? And the answer is yes. So can an employee elect out of Medicare, of employer coverage on their own and elect Medicare? Absolutely. As long as the employer doesn't give the employee any incentives, then in this situation, the employer can opt out of the employer coverage, elect Medicare, get a supplement, and the employer is off the hook. And some employers do that. They say, you know, we're going to set you up with someone to explain the secondary coverage is out there or the supplemental coverage is out there. Here's a booklet on Medicare. Look at the costs involved. And for some employers, some employees, it may even with their amount of the contributions the employers put in, and it may, in some situations, for the employee to elect Medicare and a supplement, it could be cheaper and better coverage. Now, another question I get are health FSAs, HRAs, Archer MSAs, and HSAs subject to these rules? And health FSAs aren't, HRAs are, Archer MSAs are not, and HSAs are not. So that's because in this situation, HRAs are considered to be group health plans. I think in regard to health FSAs generally are not, but it's only if they're exempted benefit and accepted benefit. If they are, then they're not subject to these rules, but if the employer contributes more than $500 to the health FSA, then I think in that situation, these rules would apply. Now, another common question I get is when somebody reaches 65, the question that many employees have, well, if I decide, because I like your coverage, Mr. Employer, and if I decide that I'm going to not enroll on Medicare and continue on your plan, am I going to be penalized? And the answer is no. Basically, what this slide indicates is that as long as you enroll within 8 months after your coverage ends on the employer plan, then you're going to be penalized. Now, if you go past that, there could be the Medicare Part V premium goes up 10% for each 12-month period for an employee eligibility that does not enroll. The increase in Part A premium is 10% no matter how late the employer enrolls. But as long as you have, again, employer-sponsored coverage, and you then enroll within 8 months after losing the employer coverage, there should be no problem. Another question is, once a retiree becomes eligible for Medicare, can the retiree coverage be coordinated with Medicare? And the EEOC released regulations a number of years ago that said there's no problem with that. What many employers do with retiree coverage, if you retire prior to age 65, then you are put into the active plan. And once you become eligible for Medicare, then it flips over to supplemental. And the EEOC said, and again, the AARP sued them in regard to this, and they said, no, it's fine. So most retiree coverage, once the retirees reach age 65, any retiree coverage offered by an employer will then drop to being secondary coverage. There's no problem with doing that. Now, what's real important is, and what's important here is the CMS is very, very active in enforcing this. Basically, the IRS enforces the rules on this, and the IRS has been basically employing law firms enforcing this and suing employers in regard to this, so they're taking this very seriously. So the question has come up, are there any penalties if an employer violates these Medicare secondary payer rules? The federal government and Medicare recipients are authorized to recover double damages from the group health plans that treat Medicare as primary in violation of these rules. So if they paid out a claim for $50,000, they can collect double. Violations of financial incentives prohibition is subject to a civil penalty up to $5,000 per violation. Code Section 5000 also imposes an excise tax of 25% of expenses on all employers other than certain governmental entities or employee organizations who group health plans fail to comply with Medicare secondary payer rules. Employers and employer organizations may appeal determinations of failure to comply with Code Section 5000. And the government has 3 years to collect health care payments that were wrongly paid by Medicare from the primary party. So again, there's a 3-year window. Now, in order to enforce this, there are reporting requirements in regard to this. So on slide 27, the question is, are there any reporting requirements? And it's under section 111 of the Medicare, Medicaid S-CHIP Extension Act of 2007. There's new mandatory reporting requirements added to for group health plans and non-group health plans arrangements. This includes liability insurance, including self-insurance, no-fault insurance, and workers' comp. So in this situation, they all have to report it. Who is required to report the mandatory reporting information to CMS? The responsibility for reporting the information to help identify whether a group health plan is a primary plan to Medicare falls upon the entity serving as the insurer or the third-party administrator for a group health plan. So if you're insured, the insurance company will do it. If you're self-insured, then it's the third-party administrator. And in the case of a group health plan that is self-insured and self-administered, it would be the plan administrator or the fiduciary. So if you, as an employer, if you do it yourself, then you would be responsible. So CMS refers to entities that are responsible for complying with the reporting requirements as responsible reporting entities. And what plans are subject to these 111 reporting requirements? Many types of group health plans are subject. This includes health FSAs, and HSAs are not, but HRAs are. But they created a special exception for HRAs, no reporting if the annual benefits are less than $5,000. So again, be careful on that. Now, what information has to be reported to CMS? CMS must be provided information regarding all individuals meeting the definition of active covered individuals. In general, active covered individuals is anyone who may be Medicare eligible and currently employed, or a spouse or other family member of the worker who is covered by the group health plan and who may be eligible for Medicare. So this is very tricky for the employer, and for whom Medicare would be a secondary payer. Now, for mandatory reporting purposes, CMS has defined active covered individuals in its user guide to include individuals who are 45 to 64 with coverage based on their own or family members' current employment status, who are age 65 or older with coverage based on their own or spouse's current employment status, anyone who has received kidney dialysis, or under age 65 and is known to be entitled to Medicare. So again, you have to check and see, and what's tricky in this situation, especially with their family members all eligible for Medicare. So it's got to be real, employer has to be diligent, because as you can see, the list of individuals could include individuals that you may not be aware of. How and when should information be reported to CMS? Information must be submitted only through electronic process and under new group health plans will register online through a secure website. Once the data is submitted, CMS will work with the entities to set up a data reporting and response process, and it will use the information to ensure that payment is made to proper order and to pursue recovery activities. And this has to be done, as this slide 32 indicates, it has to be done on a quarterly basis. Now, if you fail to do this reporting, there's another penalty in this. The penalty is $1,000 per day of non-compliance. And this fine is in addition to all other penalties which I described earlier about violations of Medicare second choice. So there's a special penalty for this one. You got to be real careful in that regard. All right, Amanda, do we have any questions?
We do. If an employee says that they're now eligible for Medicare and wishes to drop the corporate plan with no incentives or persuasion, is that allowed?
Yes. As I indicated before, an employee is always permitted to drop coverage if no incentives are given. But again, you can't allow employees to pay for COBRA premiums on a pre-tax basis, and you can't give them any money for electing out.
Understood. That's all we have for right now. Guys, just remember that if you have any questions going forward, you can leave them in the question box below, and we'll ask them when Larry pauses again.
Thank you very much. Another area that causes many employers problems is Medicare Part D. And the responsibility is mostly reporting, in the sense that you have to tell the employee, and there's two reporting. You have to report to CMS, and you basically have to give a notice to the employees of whether your coverage is credible or not. So those are the two responsibilities here. So for those employees who are eligible for Medicare Part D, what disclosure must be employer provide? And before October 15th of each year, an employer must provide a notice for those employees whether their prescription drug programs are credible or non-credible. And that will give the employee, if it's non-credible, remember if your coverage is non-credible, then the employee has to go out and get a credible coverage, or that employee is going to be penalized. So basically what your notice does, it gives them a heads up in regard to, hey, should I get my own coverage? That's the purpose behind this. Now also, this notice has to be given out at other times prior to the individual's initial enrollment, prior to the effective date of any coverage for any Part D eligible individual, whenever the employee no longer offers prescription drug coverage or changes it so it is no longer credible, or upon request by Medicare Part D eligible individuals. So generally you give it every October 15th, and these are the other times you have to give this notice. And again, the reason why the employer has to give this notice is to give the employee a heads up and whether their coverage is credible, because if it's not credible, the employee could be liable for a late enrollment penalty. It may apply after experiencing a lapse in credible coverage for at least 63 days. And the penalty amount will be the base beneficiary premiums that would otherwise apply, increased by the greater of the amount that the CMS determines actuarially sound for each uncovered month in the same continuous period of coverage, or 1% of the base beneficiary premium for each uncovered month. So again, per year, that could be a 12% increase. The question I get from most employers in this situation is, well, suppose I forget to do it. Is there any penalties if I don't provide this credible coverage or non-credible coverage notice, or you provide a non-correct notice? And as this slide indicates, slide 38, no. The only individual that is hurt on this is the actual employee, who will not know, and if their coverage is, if your coverage is non-credible, then they're going to be penalized, and you're going to have one angry employee. Now, is there any other disclosure requirements? And basically what this slide 39 indicates, you must give a CMS the heads up. A group health plans must notify CMS about credible coverage. Part D plans, however, are exempted from this requirement, as are certain employers that have approval for retiree drug subsidy, but notice must be given annually within 60 days. You have to do this in this electronic 60 days after the end of your plan year. You have to send this notice to CMS, and it's all done legally. Amanda, do we have any questions?
Yes, just a moment. If the employee selects COBRA prior to Medicare, which is primary? Also, which is primary if the reverse?
All right, we're going to be covering this in a few minutes, but I'll give you a heads up. Remember, in this situation is that COBRA is not considered to be employer-sponsored coverage. So COBRA is always going to be secondary to Medicare, always. Now, what's interesting about this is the fact that what some insurance companies do, if let's say you're otherwise eligible for Medicare and you decide not to enroll in Medicare, because only enrollment in Medicare will cut off COBRA, you decide not to. What some insurance companies may do, they may pay your COBRA on a secondary basis as if you had Medicare. So please, it's a very expensive supplemental policy. It doesn't make any sense for somebody to elect COBRA if you're otherwise eligible for Medicare. But again, if you don't enroll in Medicare, it won't cut off COBRA. All right? Amanda, any other questions?
That was all for right now.
Now, the COBRA and Medicare rules are pretty tricky. In certain situations, Medicare will expand COBRA, and other times it may cut it off. So let's look at this very carefully. When can the entitlement of Medicare terminate COBRA coverage? And basically, entitlement means enrollment. And what this slide indicates is that when a qualified beneficiary first becomes entitled to Medicare, enrolled after electing COBRA. So you have the COBRA qualifying event, you elect COBRA, and then a few months later you enroll in Medicare before the end of the period, then that will cut off COBRA coverage. But this, if the primary person, if the employee is cut off, as the second bullet indicates, it doesn't affect the rest of the family. They still get their full 18 or 36 months, as the case may be, but the person who becomes entitled to Medicare enrolled, their COBRA would terminate, but the rest of the family, it would not affect them. When does the entitlement to Medicare expand COBRA coverage? And basically what this slide is saying is that before the COBRA qualifying event, termination of employment, reduction of hours, you enroll in Medicare. All right, so you basically reach 65, you enroll in Medicare, and 6 months later, then you get terminated from your employment and you're offered COBRA. In that situation, you get 18 months, and then your spouse and children, but not the employee, becomes entitled to COBRA coverage for the maximum period that ends 36 months after the covered employee becomes entitled to Medicare, which is enrollment. So it's 36 months from when that person reaches age 65. So the covered employee remains entitled to a basic maximum period of 18 months, but the rest of the family gets 36 months. So again, in this situation, this is important. You become entitled, you enroll in Medicare before the COBRA qualifying event. That's what that slide is trying to say. Does the entitlement to Medicare before electing COBRA terminate coverage? No. And that's important to really understand. And the problem in this situation, though, is that, and try to explain to employees, is the fact you reach 65 and you're entitled to, you enroll in Medicare, then you have a COBRA qualifying event, and then you elect COBRA. It doesn't cut it off, but the problem is, because COBRA is not considered to be employer coverage, it would be a very expensive secondary coverage. That's the problem with it. So it doesn't cut it off. Is the entitlement to Medicare ever a first qualifying event to trigger COBRA? And the answer generally is not. It is not. Now, another thing to tell your employees or former employees is the entitlement to Medicare, when enrolling in Medicare, enrolling in Medicare preserve an employee's special, it should be, is enrolling in COBRA, sorry about that. Will enrolling in COBRA preserve the employee's special enrollment rights under Medicare? And the answer is no. So instead of being Medicare, it's COBRA. COBRA coverage is not considered to be group coverage, And therefore, if you don't enroll in Medicare and you wait 12 or 18 months, when you do decide to enroll in Medicare, you're going to be penalized. So again, please make sure that your employees understand that. Medicare is not considered to be employer coverage, and if you delay enrolling in Medicare, you're going to be penalized. Must the plan still offer COBRA coverage to retirees when alternative retiree coverage is offered? And generally, it's yes, because the offer of COBRA coverage is generally not the same as active. They may be paying a different amount or different coverage. And so any change in way the premiums are paid or the coverage is considered to be a loss of coverage. And because there's a termination of employment, that's a COBRA qualifying event. So if you don't offer COBRA at the time that person retires, if you offer the retiree coverage and later that retiree coverage ends, at that point you would have to offer them COBRA. So if you don't offer it at the time of retirement, you have to offer it later when the retiree coverage ends. And again, must a plan offer COBRA to retirees when alternative retiree coverage expires? It depends. If you offered COBRA at the time of the qualifying event, the termination of employment, you offered them and they turned it down, and a few years later, the alternative retiree coverage ends, then you don't have to offer them COBRA. But if you didn't at the time of the qualifying event, then at the time when the alternative retiree coverage ends, at that point you would have to offer them COBRA. Extremely important to understand. Amanda, are there any questions?
We don't have any more at the moment. I'll linger on the line for a little bit longer in case anyone has any questions.
Sure. All right, let's look at the other areas. And first of all, HSAs. Extremely important, and people are under the misconception that as soon as you become, they reach 65, you're no longer eligible for HSA contributions, and that's incorrect. Code section 223B7 indicates you have to be enrolled in Medicare. So again, be very careful. Also be very careful as sometimes when you enroll in Social Security, they go back 6 months. And that kind of hits individuals. So if you enroll in Social Security, they're going to collect Medicare and you didn't elect Medicare, they may go back 6 months. But again, what triggers the inability to contribute to an HSA is enrollment in Medicare and not reaching age 65. So please understand that. So it's entitled to Part A. And again, another misconception is when you reach 65, enrollment in Part A is automatic. It's only automatic if you enrolled in Social Security. If you haven't enrolled in Social Security, it's not automatic. You have to enroll in Parts A and B. So please understand that. I get a lot of questions about that. People thinking that enrollment in Part A is automatic. No. The only time it is automatic is if you've enrolled in Social Security. And next, can HSA be used to reimburse individual for Medicare premiums? And the answer is yes, as long as you've reached age 65. You can get reimbursed for Part A if you have to pay Part A, B, and C, but you cannot pay for Medicare supplemental policies. So it's A, B, or C can be reimbursed under an HSA. But again, only if you reached 65 or your dependents have reached 65. If your spouse is under 65, as the last bullet indicates, their HSAs generally cannot be used by retired account holders for their health insurance premiums prior to age 65. So the individual that you're reimbursing has to be 65. Is Medicare coverage considered credible coverage for HIPAA purposes? And the answer is yes. Medicare is subject to Medicare certification requirements under the public rules and count as credible coverage, but they are not otherwise subject to the portability rules, non-discrimination, or special enrollments. And they do not constitute group health plans under the public service rules, ERISA, or under the code, but they are for certain other requirements under HIPAA. Are there any other questions?
Just a moment. That's all for right now.
Well, if there's nothing else, thank you very much, and we'll see all of you in a few weeks. We're going to be talking about how to survive a DOL audit. So there's been increased audit activity over the past 6 months, and if you get a letter in the mail, we'll tell you how to deal with it. Okay, thank you very much, and we'll see everybody in a few weeks.
That'll be on June 6th, again at 1 p.m. Central, and you can sign up on Benefit Express's website. We'll be sending everybody an email with the registration link shortly. Thank you so much for joining us.
Take care.
Bye-bye.